What if I told you there's an AI healthcare company trading at just $1.65 per share that owns the world's largest database of standardized brain scans, over 191,000 EEG recordings, and just grew revenue tenfold year over year in their latest quarter? A company with FDA-cleared technology that's partnering with pharmaceutical giants like Novartis and Takeda, while working alongside NVIDIA to build what could become the first AI foundation model of the human brain. This microcap stock has been absolutely crushed, down from a 52-week high of $17.20 to its current price, representing a staggering 90% decline. But here's what makes this particularly intriguing. They just completed a transformational $6 million acquisition that tripled their patent portfolio, added 60 commercial customers overnight, and immediately boosted quarterly revenue by over 1,000% compared to last year. Their technology helps diagnose depression, dementia, ADHD, and anxiety disorders using AI-powered brain network analysis, addressing a massive healthcare market with limited objective diagnostic tools. They're burning less cash each quarter, recently raised $8.8 million through warrant exercises, and ended Q3 2025 with $4.3 million in the bank. The stock has been decimated, the financials show dramatic improvement, and the technology validation from big pharma partnerships is undeniable. Could this beaten-down AI neuroscience stock be positioning itself for one of those explosive micro-cap recoveries that rewards early contrarian investors? Before I reveal which AI brain health company I'm analyzing today, if you're new to smart investing, welcome. I focus on discovering undervalued AI and healthcare technology stocks with real FDA-approved products and genuine commercial traction that most investors are completely overlooking. I specialize in deep fundamental analysis on high-growth opportunities in emerging sectors like artificial intelligence, neuroscience, and medical technology. If you want to uncover more hidden gems like this, companies with proven technology generating revenue but trading at severely depressed valuations, make sure you hit that like button and subscribe to Smart Investing. Now let me show you which AI neuroscience company could be ready for a major turnaround. The company I'm analyzing today is Firefly Neuroscience Incorporated, trading on NASDAQ under the ticker symbol AIFF. Firefly Neuroscience is an artificial intelligence company developing innovative neuroscientific solutions to improve brain health outcomes for patients with mental illnesses and neurological disorders. Founded in 2006 and headquartered in Kenmore, New York, Firefly has developed its FDA 510(k) cleared brain network analytics platform, called BNA, which uses advanced AI algorithms to analyze EEG brainwave data. Their technology focuses on diagnostic and treatment monitoring for depression, dementia, anxiety disorders, concussions, and attention deficit hyperactivity disorder. The company serves pharmaceutical companies conducting clinical trials and medical practitioners in neurology clinics. Following their May 2025 acquisition of Evoke Neuroscience, Firefly now operates the world's largest standardized EEG/ERP database with over 191,000 brain scan records, 27 granted patents, and more than 60 commercial customers. Firefly presents a compelling high-risk turnaround opportunity in AI-powered brain diagnostics with several transformational catalysts converging. The Evoke acquisition fundamentally changed the business trajectory. Completed in May 2025 for $6 million, this deal doubled their proprietary brain scan database to over 180,000 records, tripled their patent portfolio to 27 granted patents, and multiplied their commercial customer base tenfold to over 60 users. Most importantly, it brought immediate revenue. Evoke generated approximately $30 million in total historical revenues over 16 years. Revenue momentum validates the acquisition strategy. Q3 2025 revenue hit $388,000, representing over 1,000% growth year-over-year from just $33,000 in Q3 2024, and 30% sequential growth from Q2's $299,000. EEG scan volumes increased 10.9% quarter-over-quarter, demonstrating successful business integration and growing adoption. Operating efficiency improved dramatically. Total operating expenses decreased approximately 35% year-over-year to $2.8 million in Q3, while net loss narrowed to $2.6 million, a 38% improvement. Cash burn in operations was just $1.5 million, the lowest quarterly amount in the first 9 months of 2025. Q3 2025 results released November 12 exceeded expectations given the company's size and recent transformation. Revenue of $388,000 demonstrated the immediate value of integrating Evoke's established customer base and revenue streams. The Evoke Neuroscience acquisition closed in May 2025, paid 50% cash and 50% stock at $3.50 per share, with a potential $500,000 earnout if the acquired business achieves $3 million in annualized revenues within 3 years. This strategic move positioned Firefly to build the world's first EEG/ERP-based foundation model of the human brain. Partnership momentum accelerated throughout 2025. Firefly was accepted into the NVIDIA Connect program in February, gaining access to advanced GPU resources and AI development frameworks. They deployed NVIDIA L40S GPU acceleration for their new Clear preprocessing platform. Strategic partnerships include collaborations with Takeda Pharmaceutical, Novartis, Bright Minds Biosciences, and a distribution agreement with Healing Maps covering over 2,500 ketamine, psilocybin, and TMS clinics across North America. Firefly was added to the Russell Micro-Cap Index effective June 30, 2025, potentially increasing institutional visibility and investment. Currently trading at $1.65, AIFF represents an extremely high-risk, high-reward speculation on AI-powered neuroscience diagnostics. There are currently no published analyst price targets or coverage, making valuation particularly challenging and speculative. The optimistic case: if Firefly continues revenue growth trajectory, achieves $2 to $3 million in quarterly revenue within 12 to 18 months, approaches cash flow break-even, and successfully leverages their NVIDIA partnership to commercialize their brain foundation model, the stock could reach $5 to $8 per share, representing potential gains of 200% to 385%. At that valuation, the company would be generating $8 to $12 million in annual revenue with a clear path to profitability in this massive brain health diagnostics market. The risk scenario: revenue growth stalls as the initial Evoke acquisition boost fades. The company burns through its current $4.3 million cash position, requiring dilutive financing at depressed valuations. Pharmaceutical partnerships fail to convert into meaningful recurring revenue. The stock could decline toward $0.50-1.00 or face delisting if unable to maintain NASDAQ compliance, representing 40 to 70% downside risk. There you have it, Firefly Neuroscience, an AI brain diagnostics company trading at $1.65 with transformational acquisition momentum, over 1,000% revenue growth, 191,000 brain scans in their database, and major pharmaceutical partnerships. With 3 consecutive quarters showing the integration benefits and improving unit economics, this could be a compelling high-risk turnaround speculation for investors comfortable with micro-cap volatility. What's your take? Is the acquisition-driven growth and pharmaceutical validation enough to justify the extreme risk? Share your thoughts in the comments. If this deep dive provided value, hit that like button and subscribe to Smart Investing for more AI and healthcare stock opportunities. Remember, this is educational content, not financial advice. Thanks for watching.